Okay.
Okay, so this is the Bectu webinar on the government schemes around coronavirus. I'm Naomi Taylor. I'm a negotiations official at Bectu. We're just going to wait a little bit longer just to make sure that everybody's signed in, and then we'll let Tony start. But we'll just take a few more minutes, Tony, just as to let people come in, because I can see them coming in through the system.
Ah, there it is, bottle of water. Actually, I need to edit that.
Okay, Tony, I think we've got most people in. Are you ready to start your talk about?
Yes, I'll share my screen. Hold on.
Awesome. And if anybody has any questions along the way, we're going to do a Q&A at the end, but please feel free to pop them in the, I prefer it if you put them in the question and answer box that we have that you can find at the bottom of the screen. But if you get really stuck, then put it in the chat box. Okay, go ahead.
Okay, here we go. Right, good afternoon, everyone. Thanks for joining us. Not a happy occasion in some respects because you're here because our industry's kind of fallen off the edge of a cliff. And the union is doing all sorts of stuff, including lots of these webinars to support people. We've been lobbying government and we've been talking to employers, trying to get them to cooperate as far as they can and make life easier for people. I'm going to be talking today about a number of support initiatives launched by the government, which are relevant to both employees in some cases and to self-employed and to people working through limited companies. And there'll be plenty of time for questions and answers after that. And I think I better get cracking on. Right, firstly, we have to accept that there is some government support. There's quite a lot of it, actually. Which is working for some members, but it doesn't work for all of them. We don't think it goes nearly far enough. For example, people who are bounced onto a universal credit have to get by on £94 a week. But we are nevertheless saying to people, go and consider claiming under universal credit. If you've never done it before, you might be pleasantly surprised to discover that you can actually get at it for once, all right? Quickly, I'll run through some tax things which are worth pointing out to you. There's been quite a lot of forbearance on behalf of the government and HMRC. The self-assessment payment that you would have been making on account if you're a self-assessed taxpayer, that is, you put your tax return in by July the 31st every year. That payment that would normally be drawn down in July has been deferred until January. You'll still have to pay it. It means that you'll get a bill for 1 year's tax in 1 month rather than the 6 months. So you'll need to think about having the money there. Worth pointing out that, I'll come to that in a second. So that's one major help in a way, because it means that some people who might have been holding money in their bank account expecting they had to hand over to the taxman have got until January to do it. VAT was deferred. This is VAT returns were deferred for 3 quarters. These were the quarters that ended, if you do it quarterly, which if you are VAT registered, you probably do, ended on the 7th of April, 7th of May, 7th of June. It's not being excused, but that VAT will become due at the end of the tax year. So you'll need to have some money then to pay your 20%. And what HMRC are warning people, and this also I think applies to self-assessment, if you've got a direct debit that allows HMRC to take your VAT return money directly from your account, cancel the direct debit. Do this also if you have set up an arrangement for your self-assessed tax. HMRC are quite worried that the level of automation that they run is so high that their machinery might still take the money even though they've said you don't need to pay it. IR35, some of you may have been to sessions that I've run or come across this in the industry. There were meant to be some fairly sweeping changes to IR35 in the private sector in April this year. They've been deferred until April next year. It's not going to go away, I'm sorry to say, and they've already started drafting the legislation to make it happen in April next year rather than April this year. But for the moment, it's in the long grass, and we can all stop talking about and thinking about IR35 for the moment while we work out how to put food on the table, basically. We'll come back to IR35 later in the year. A couple more quickies that you may want to know about. They very seldom talk about it, but HMRC have admitted again, they do actually have a time to pay scheme. They normally don't advertise this, but if you're in any sort of difficulty paying tax, they have an arrangement where you can talk to them. It's on a one-to-one basis, but you can talk to them and they will generally agree some kind of installment arrangement by which you can pay over a period of time instead of doing it all at once. They much prefer to wait for you to miss the date and collect the fine, which is probably why they don't advertise it so widely. But the scheme is there and you can use it if you have any problem whatsoever with tax, whatever form of tax it is. Finally, for those of you who are company directors, you may or may not know that you have various fiduciary duties, one of which is you are not meant to trade if your business is officially judged to be insolvent. The unfair trading rules have been suspended. It's the Insolvency Act 1986. And for the moment, you can sail much closer to the wind than you ever have done in the past, and your creditors can't do anything about it. That's for the duration of the coronavirus crisis. But if your accountant says, oh, I'm really worried about trading, just tell them to go and check on the unlawful trading rules. Let's move on to benefits. Okay, I've already mentioned universal credit, and you'll probably hear me mention it a few more times. There's one major change for freelance people, meaning the self-employed, not people who are directors of their own company and on the payroll, but for the self-employed, this is the people doing tax by self-assessment. There is normally a thing called the minimum income floor in universal credit, where there is an assumption that you have an income which is equal to 35 hours a week at the relevant national minimum living wage, which for most of you would be £8.60 something at the moment. In itself, 40 hours of that per week over the 4-week assessment period for universal credit is usually enough to bounce most of you out of universal credit. So the minimum income floor in itself has been a massive barrier for self-employed people getting access to universal credit. That has been suspended. So you may have access to universal credit for the first time ever. So go and use it. You can do universal credit as well as everything else I'm about to tell you. They've very generously increased some components of universal credit. So, for example, the basic award you're likely to get if you qualify has gone up to as much as £94 a week. That's generous, isn't it? But at least it's something. 94 quid a week is better than nothing. One last thing that's been changed is there is no need for a face-to-face interview. You used to have to go down to the job centre. They now do it over the phone. And again, helpfully for freelancers, part of that interview used to be you had to sign up to a commitment which said, I will go for X job interviews per week, and if I'm offered a job, I will take it, which is not exactly how freelancers work. They're just waiting for the phone to ring usually, and they may or may not take the job if it's offered. That's all been replaced by a quick telephone interview once you've done the online application for universal credit. So do go and do it. There are 3 modes of employment I mentioned at the beginning. We have PAYE employees. We know what they look like, but in our industry, quite a lot of them are they call themselves freelancers because they get very short-term engagements erratically with lots of different people. Nevertheless, they're put on PAYE. We're now calling them PAYE freelancers, but they're still in PAYE, and that determines what they can go for in terms of government support. Then we've got the self-employed sole trader. That's the individual, not a limited company, but trading as a business in their own right. And they're doing their self-assessment tax return usually on about January the 30th every year, if they're leaving it to the last moment. We've all done it. But there's something for you. And if you're working through a limited company, meaning you're a director of your own limited company, you are actually an employee of your company for tax purposes by law. You may or may not have been receiving a wage, but there's probably something for you when I get towards the end of this presentation. So let's talk about PAYE employees. You'll have heard about this furlough scheme. It's actually the coronavirus job retention scheme. To qualify, you need to be on a PAYE report that's made any time during the last tax year by the February the 28th or the 19th of March. Incidentally, the 19th of March was popped in to the formula after the scheme was first announced, and that's a result of us lobbying the government to point out that by doing the 28th of March, they had blanked out a lot of people who were getting PAYE at some point in March as members of the PAYE scheme. They weren't being counted in, so we had a bit of a win there. One condition here is that you must not have been cessated. In other words, there mustn't have been a PAYE report which, in addition to saying you earned X, also said, oh, and you finished working for us on a date that was before either of those dates, 28th of February or 19th of March. So no cessation, that's a condition. And your employer has to be willing to furlough you, because this is a voluntary exercise. It doesn't cost them very much, because all they have to do is put you back on payroll. And they're all automated systems, and all they have to do is enter your details, press a button, and that's it, you're done. If you are furloughed, you go home. This is designed very much for permanent employees. You go home, you sit there, you earn up to 80% of your earnings. If the employer makes a claim for that, it's subject to a maximum of £2,500 a month. The furlough income is paid through payroll, so you still look like an employee, but the one condition there is you must do no productive work for the employer. And the scheme's only been open for 2 weeks. It's already clear there are some naughty employers who are furloughing people and then sending them work to do at home, which is completely in breach of the system. If they get caught out, they'll be in deep trouble with HMRC. So that essentially is the job retention scheme. It applies to PAYE freelancers, but they've got to get their ducks in a row. They've got to find an employer who was putting them through payroll before either of those dates, who has not cessated them. Okay, and actually the good news is PAYE freelancers are generally left kicking around payroll systems for quite a long time after their last gig, very often with the engager expecting, oh, we might have them back next month or the month after, so we'll just leave them on. So that's the job retention scheme. I've pulled out a bit of law because there's been a lot of confusion about exactly who qualifies and who doesn't. So this is what the law says. Employers can make a claim for a job retention grant in respect of employees to whom they've made a payment of earnings in the tax year 2019-20, which is quite a long time, which is shown in a return under Schedule A1 to the PAYE regulations. That's the 2012 regulations that brought in a thing called real-time information, RTI. It's all done electronically. That is made on or before a day that's a relevant coronavirus day, and these are the 2 dates I've mentioned already. Second condition, must be claimed in relation to an employee whom the employer has not reported a date of cessation of employment on or before these 2 relevant dates. Okay, bit complicated if you don't understand the PAYE system, but the key to it is, did I get a PAYE payment realistically in February, March, or maybe a bit before? If I go back to the employer, would they entertain the idea of putting me on furlough? Because it doesn't cost them anything and it helps me a lot. And let's just check that I haven't been cessated from that scheme before either of these key dates. So that's it really for PAYE people. Just to help you calculate the 80%, the formula for this is it's 80% of either or, higher of them, the average monthly, or if it's less than 12 months, pro rata wage for the previous 12 months, or your actual pay in the corresponding period 12 months earlier. I think for PAYE freelancers, if you can find an employer who's willing to do it, and many of them are, they will be looking at pro-ratering often a very short period of time, which could be a day or a week, but there is scope to do it. Just a few other things on this furloughing thing. Rehire is permitted, provided if you were redundant or terminated after the 28th of February or the 19th of March. While furloughed, you can work for other employers. You can go and do self-employed work, and you can have multiple furloughing. You can be furloughed by multiple employers if they're willing to do it. So it's quite unrestricted, and there's no linkage with universal credit here. Okay. Although if you declare that you're on furlough, then that will be taken into account when they're calculating your universal credit. Company directors can be included in furlough if they are on a relevant PAYE report. Okay, I'll come to that a bit later. There is a problem for you. Dividend payments, however, are not included. There was a lot of debate about this. We lobbied very hard for dividends to be included. The Treasury believes it's impossible to tell whether a given worker has received dividend income because they were providing their services and that's the way they got paid, or alternatively, whether they just had lots of shares in BP and they hadn't actually done any work to earn the money. We've given them several formulae by which they can look back in time and work out from previous behaviour what was actually happening in 2020 and whether somebody was gaming the system. Finally, there was a lot of confusion about who's actually eligible to claim for furloughing and the question of whether it's, for example, a state benefit for various legal purposes. The government cleared that up about 2 weeks ago by stating categorically that foreign nationals are included. And that's not just EEA and EU citizens and Swiss citizens, that it's all third country foreign nationals. They're entitled to be furloughed, provided, of course, they've been here working, paying their national insurance and tax, which by definition they have to if they're on PAYE. Okay, here's the slight problem that we've got. Who's excluded from furlough? This is a problem in our industry much greater than it is in other parts of the economy. Contracts that started and finished between the 28th of February and 19th of March can't be furloughed. And secondly, fixed term contracts, right, which expired before the 19th of March and were not extended, right, can't be furloughed either. So whilst an employee can go back and say to their employer, please put me back on the books, and I explained about rehire, if you were on a fixed term contract, which you may have been as a PAYE freelancer, although many of them are worded in a way that makes them open-ended contracts, but if it expired before the 19th of March, at the moment, the employer cannot put you back on the books, okay? And a lot of people who finished during March have run into this problem. We're trying to help by leaning on the employers. We've had numerous meetings, for example, with PACT, the Film and TV Producers Association, and we're setting up another phone conference with them this week. Right, final point on this. How do you know you're self-employed? Well, you're self-employed if you have a contract of employment, okay? But you may not realize you're an employee properly because you get treated like a freelancer. This brings me to the concept of the Limb-B worker. The Limb-B worker is someone who eventually ends up being treated as an employee for tax purposes, but not really getting any employment rights except those owed to workers. And the main one that you'll have come across is holiday pay. Limb-B workers are now explicitly included in the furlough scheme. So even if you were on a dodgy contract, provided you got paid through PAYE, you can go back to the employer and say, look, I know I wasn't an employee for employment law purposes, and I didn't get any protective equipment from you, or space in the car park, or whatever, subsidised canteen, free training, all the stuff you give to employees. But I'm Limb-B, and I can go back onto your books, provided you're not caught out by the dates covering fixed term contracts, and it depends how your contract is worded. Right, that's it for employees. Let's now talk about self-employed sole traders. There's a scheme for you. You're the people who put your tax in by January the 31st every year. There is a self-employment income support scheme. The conditions to qualify for this are your self-assessment tax return must have been put in either by January the 31st, or if you missed it for some inexplicable reason, because you will have been fined to death by now, they opened a window for late filing that finished on April the 23rd. So provided you got your tax return in, they know you're self-employed. They then need to check if your self-employed profit was less than £50,000. If it's over £50,000, unfortunately, they're excluding people. We think it's really unfair because there's no such limit for employees on the previous scheme. And your self-employed income must represent 50% or more of your taxable earnings. What are your taxable earnings? Well, it's everything that you put on Form SA100. So your self-employed earning comes off Form SA103, goes onto Form SA100. Any PAYE income will normally have been pre-populated there. There might be property income if you rent something out. There might be interest from money you've got in the bank. There might be share income, dividends from some shares that you've got. That all gets added up. And the test here is that to get the income support scheme, you must be above 50% self-employed earnings. If you tick the boxes, you can claim a grant. In fact, it's going to be done automatically. Again, there's a maximum of £2,500 per month, and it will be a 3-month payment for the 3 months up to the end of June, based on your average earnings over a certain period. The invitations to apply from HMRC have gone out today, and a number of you may already have visited a portal where all you do is confirm your UTR number, and it does all the rest for you. Business profit, this £50,000 limit. Some people have asked questions about this. So let me just explain. Your business profit is your income, which would have been box 21 on SA103S, or box 47 on SA103F, which is the full SA103 declaration. You then deduct your business costs. Very helpfully, HMRC have for the first time published a clear list of things that they already accept as being business costs, and I've listed them here. Office costs, travel costs, clothing, mustn't be dual use clothing, by the way, finance, business premises. You can claim for the use of your own home as a home office, not very much, but you can get some money back. Advertising, capital allowances have to be taken into account, and flat rate expenses. And there's a few others, and you can go and look on the web for that advice. But that's how you calculate your business profit. If it's below £50,000, that's what you put in your SA100, and that ticks the box for how much did you earn. As I said, it opened today on the 4th of May. There's an invitation gone out via email, and it is all automated, and it will just make an automatic decision going back and looking to check that you tick the correct boxes that we described a bit earlier in the self-employed scheme. So that's it for sole traders. What if you're working through a limited company? There's one big question you really need to ask yourself. Were you operating a PAYE scheme before the 28th of February or the 19th of March? If the answer is yes, you may qualify for furlough, and the condition that you're not meant to work for your company has been relaxed for company directors who are allowed to do some tasks to do with compliance. So, filling in, you're doing your accounts, filing stuff for Companies House, doing your CT 600, all that kind of stuff. You are allowed to do without disbarring yourself from the furlough. However, if you were not operating a PAYE scheme before those dates in the tax year 2019 to 20, you are excluded. And I'll use the Chancellor's words, because you earn salary and dividends through your own company. Simple as that. Most unfair for most of you, but that's what the government has said. However, if you do pay a mixture of salary and dividends, and you were operating PAYE before those dates, then you can actually furlough yourself on 80% of whatever your calculated wage was. I need to add another slide here because there's been a further problem. When the claims portal opened up for the income support scheme, lots of people from limited companies applied, and they found they were bounced out. And they then rang HMRC to say, I've been bounced out, what's wrong? And unfortunately, the fairly junior advisors who do the helplines for HMRC said, we don't know what the problem is. Surely you should qualify. Anyway, when they went and consulted their betters, they went back and read the law, which I've been telling people about since the 15th of April when it was published. There's a big gap here, which is for company directors who do payroll just once a year. And so the accountants do this usually, not you personally. The accountants have this thing about year end. So they generally will do payroll once on March the 31st. March the 31st, you'll understand, is after March the 19th. Then March the 19th was effectively the cut-off date for PAYE reports that would qualify you for furlough. So, you know, talk to your accountant. You may or may not qualify for furlough, but if you didn't get your PAYE done before the 19th of March and nevertheless did it afterwards before the end of the tax year, that does not tick the box, unfortunately. We can understand why they've done it this way, because from the 20th of March, when this scheme was announced, there was always a danger that some unscrupulous people would think, oh my God, that's great. If we can get a PAYE filing in by the end of the tax year, we can get lots of money off the government. Yeah. And they wanted to prevent people gaming the system. And that's where the 19th of March cut-off date came from. Right, you haven't got a PAYE scheme. There's two things for you. And there's universal credit as well. Look, there's a thing called the bounce back loan scheme that opened at 9 o'clock this morning. I will explain that to you. There's a very separate thing called the business interruption loan scheme, which doesn't work for most people on this call, to be perfectly honest. It doesn't work for you. And that's why the bounce back loan scheme has been introduced. It's specifically aimed at small businesses and is meant to be much, much easier than the business interruption loan scheme, which was meant for fairly large businesses with accountants and all that stuff. So, yeah, I mean, have a look at the business interruption loan scheme by all means. I probably wouldn't bother with it. Bounce back loan scheme, here's its design. You can borrow between £2,000 and £50,000 starting this morning. The loans are 100% government guaranteed. So the whole credit checking thing is much easier for the lenders. And they're a standard 6-year term with an interest rate of 2.5%. Actually, I was pleasantly surprised to see 2.5%. I'll tell you why. Because lots of people who applied for the other scheme weren't given loans under the scheme, but the bank said, oh, well, you can get a commercial loan, of course, but that'll be 20% interest and things like that. So this is a kind of realistic rate of interest at the moment. The lender makes no repayments whatsoever in the first 12 months and only starts paying the loan off in month 13. There's only one condition, really, about getting a loan from this, and that is that you were not in difficulty as a business on December the 31st. Oh, the loan, incidentally, is now limited to 25% of your trading profits, of the company's profits. But the key to this is that you were not in difficulty on the 31st of December, which I think is defined as being your borrowing being 50%, the credit you were carrying being 50% of your turnover or more. There's no need for a personal guarantee on this, so the credit restrictions are actually quite loose, and applications are open now. They started this morning, so it all sounds great. However, I've been playing with this since 9 o'clock this morning when it came online. They promised us 40 lenders. There are only 10. At 8 o'clock this morning, there were only 6. 10 magically appeared at 9 o'clock. The others of the 10. All of them are saying we will only deal with existing customers. Okay, so if you don't have an account with one of these lenders, you probably may not be able to apply. Some of them are offering limited scope for new accounts, so you could try and open an account, but opening an account puts you straight back into all the difficulties of money laundering checks, know your customer checks that they think they're legally meant to carry out. The government's saying don't bother in this circumstance, but they think they still need to do it. And as many of you will realise, opening a new bank account is a really difficult thing these days. Those that aren't prepared to say you can open a new account generally are saying, oh, well, we may come back to you later, but we're prioritising our existing customers. So there's a big problem with the thing there. Next big problem, nearly all of them are saying that the bank account we're talking to has to be a business bank account. Now, anyone running a company will have one of those, and some of the, this is quite rude, more organised, is that a rude thing to say? But some more organised self-employed people will probably have a business bank account, and we strongly recommend you to have one because HMRC look for one when they're trying to work out if you are genuinely self-employed. You know, one of their questions is, do you have a business bank account? The scheme was meant to be directed at both limited companies and at the self-employed. However, some of the lenders are being very unclear about whether or not they will entertain loans to the self-employed. And some of them, from the application processes that they've put online this morning, are clearly interested only in limited companies making applications. But there it is, for all its failings, and it may not cover most of you, this is a much easier scheme than the other business scheme that I explained. So The business interruption loan scheme, I'll very quickly explain. That also is overseen by the British Business Bank in concert with commercial lenders. These are all commercial loans. To qualify, I think you'll probably all meet the first two. Turnover below 45 million, application for a loan less than 5 million. It is intended to be interest free, but not capital free for 12 months. So you need to repay your capital. Most members will meet the primary criteria, which are basically whether you're self-employed or a limited company, you're running a business in the UK, you were trading last year, you intend to trade next year, and pass those tests, you then get into the difficult test, which is the business viability test that the bank will conduct, which is a look at your past trade and your future trade. And they will commercially then determine whether they think if they give you the loan, because it's 80% guaranteed by government, but they're still carrying 20% risk here. They want to work out if your business will actually be able to repay them by the time that the end of the loan period finishes. So business interruption loan scheme, it is still there. If you can't get into the other one, which is a lot easier, you might have a look at this one, but I don't think it's the right one for you, especially now we've got the bounce back scheme. So if you're employed or not, I said I'd bore you to death about universal credit. Do remember universal credit, please. However, there are two things to think about. Firstly, are you already on benefits but not universal credit? And to explain why you need to ask that question, some people do manage to get some universal credits even though they're freelance. So working tax credit, you know, I know I've dealt with members who've managed to successfully claim working tax credit. If you're on the old standalone working tax credit scheme and you move on to universal credit, you will get less than you did in the old scheme, and you can't reverse. You can't reverse out of universal credit when things get better and you get some work, but you want to get your full working tax credit back. Can't be reversed. So helpfully, the advisors at job centres have been quite good about this. They're actually asking people the right questions of, okay, have you got any benefits already? Well, I'll show you what this might mean if you go on to universal credit. So there might be a tricky decision there. Second thing that people tend to forget is to claim universal credit, you need to pass the habitual residence test. Now, for UK citizens, that's usually quite easy. For EU citizens who have applied for and secured settled status, that's you've been here 5 years, you want to stay on after the withdrawal date, you apply. You don't get much for it apart from an email, but it is a confirmation that you are habitually resident here and you can stay. The difficulty we've run into is that people who have applied for non-settled status, who haven't been here for 5 years, are having to do the habitual residence test, even though their intention is to stay. So they're having to produce all sorts of bits of paperwork, bank accounts, letters from the doctor, letters from your kids' school, rent payment slips, all this kind of stuff to prove that you are habitually resident here. And for third country people, even if you pass the habitual residence test, many of you will know this or will find out that your visa, whatever form it is, whether it was a work visa on tier 2 or 5 or a family visa, the youth exchange visas, I think, are an exception to this by definition. But you'll find that you have no recourse to the public purse. In other words, you cannot apply for universal credit because you don't pass the habitual residence test. So just warning you about the pitfalls. That's universal credit. Please go and apply for it. And finally, we are still working on the Treasury on the basis that many self-employed members are locked out of these government support programs because of the pattern of their work and some of the conditions that have been put in. And in the case of company directors, they're semi-locked out because they have historically, and their accountants have just done this for them usually, no discussion. Historically, they've been paid in dividends and a small salary. People think it's a massive tax fiddle. In fact, if you work out the numbers, the company directors up to 50k, the company directors are paying pretty much the same tax as everybody else. And in fact, below about £41,000, they actually pay more. So the myth about this being a massive tax fiddle, I think, is much exaggerated. Anyway, that's enough from me. And I'll hand back to maybe I'll stop sharing this. Hand back to Naomi. Okay, all yours.
All right. Okay. So Yeah, thank you, Tony. That was really interesting, and the updates are really useful as always. We've got quite a few questions that have come through, but before we got into that, I just wanted to ask. I know you sort of touched on that slightly, but I just wanted to ask about the government lobbying that Prospect and Bectu have done. I mean, could you give us like a little update on that, just to give people an idea of what?
Look, the Prospect has a fairly big department that does communications, public affairs, and political stuff. So we're quite lucky, actually. They have been in weekly and sometimes daily contact with the Treasury, Bees, and DCMS. And we've been drawing to their attention the plight of the non-typical workers. What's interesting is I've been advising people on what to look for, because I do all the freelance stuff. I haven't spoken directly to them. They've spoken to HMRC, whom I deal with. What's interesting is the mindset of your average Whitehall civil servant is the whole world is like us. It's all permanent work. They all work Monday to Friday, 9 to 5. So that's how we design the systems. And of course, it doesn't work for people in our industry, where there's every 52 varieties of atypical working, and that's probably an underestimate of the various permutations of how you work, when you work, and how you pay tax. So look, we have been working on them. We sent another letter directly to the Chancellor last Friday, and we do get responses. And what's really interesting to note is that, and they're all saying this in this our department in Waterloo that does this, they've had more contact with the government over about the last 5-6 weeks. They've had more contact with government over 5 or 6 weeks than they can remember having in 10 years. All right. So yeah, they are knocking their pipes out, and they're doing a really good job.
Okay, cool. Well, you asked us to do a poll as well, Tony, because what you were talking about with the business bank accounts, I think we just wanted to get an idea of where people stood with that. So if
I tell you what, I'll just explain why the question is relevant. It's only been relevant since this morning. The design of the bounce back business loan scheme, the design of the scheme did not feature a condition that was you needed to have a business bank account. The lenders have all decided to apply that as a condition. Now, the reason they're doing it, of course, is that business accounts are more expensive than personal accounts, where generally, until you go into overdraft on a personal account, it's free. It's not free if you have a business account. That's why they're doing it. But I'm just intrigued to know, on this fairly small sample, how many people would fall at the fence if they applied for the bad bounce loan. That's all.
Okay, all right. Well, so I'm going to launch this poll. So we've got a poll. Okay, so I'm going to just edit this quickly because I just realized that question doesn't make any sense. No, I'm not going to do that. Okay, back to the question. Okay, just everybody bear with me because I've never done a poll before and the question isn't very good. I've written how many have a business bank account, which is not a good question. Can you please read it as, do you have a business bank account? And the answer is yes, no, don't know. So I'm going to launch this and just work with my technological stupidity on this particular one. Okay, so while we're waiting for people to answer the poll, let's get into some of the questions. So we had a question in the chat that I thought was quite useful in terms of that particular conversation. Patrick was saying, I have been using my current account for my business for the last 8 years. Will it be classed as a business account? Will the grant be backdated, and to what date?
Is this a question about the new loan scheme?
Yeah, I assume so.
Okay, right. It varies from lender to lender as far as I can see, and I've only had a couple of hours to go round them all, but it appears that provided you've got a business bank account, all right, it may qualify you for the bounce back loan. In some cases, lenders are accepting that. Yeah, there's 1 or 2 lenders who are saying that if you've used your own bank account to work as a sole trader, they will let you gateway through to the next test. but it's a bit unclear. Clydesdale, I can't work it out at all, frankly. The answer to your question is probably yes. If you had a business bank account and you go to that lender, then the fact you've got a business account, and they set varying retrospective dates for when you started trading, which is even, some of them have gone back to the beginning of the last tax year, some haven't. If you think that loan thing is good for you, give it a try. But bear in mind, at the moment, you'll be restricted to your own lender, and there are only 10 of them. Do you want me to tell you who they are?
Yeah, sure.
Right. Barclays, Bank of Scotland, Santander, Clydesdale, Danske Bank, if you're in Northern Ireland, HSBC, Lloyds, NatWest, Ulster Bank, and RBS. Now, most but not all banks that people, small businesses might be banking with are on that list, but there's bound to be lots missing. Okay.
Okay, so just looking at our poll, it's so for do you have a business bank account?
Sorry, Patrick Winkle, sorry, I just found your question. It's not a grant, this is a loan, okay, and you just decide how much you want to borrow between £2,000 and £50,000, and provided it's not more than 25% of your turnover in, I think, the last year, then you should in theory qualify for it, provided the business was sound at the end of December. Sorry to do that to you.
No, it's okay. I think just to check, because I'm not sure what Patrick, now you've said that actually, Patrick, if you were talking about the loan scheme, then what Tony says applies. If you're talking about the actual self-employed support scheme, then I assume a current account is fine. So yeah, okay. So in terms of the results of the poll, do you have a business bank account? So 23% said yes, and 77% said no. So I'm going to end that poll. So I think that kind of, I think that very much sort of fits in with what we feared, that will be.
Yeah.
Okay, so I'm just going to take a look at some of the questions. We've had another one through from Karima. And the question was, can you take a PAYE job while waiting for self-employed furlough?
The answer is yes. And yes, you can. You can carry on working as self-employed, obviously, and you can offer your services for a limited company if you wish. All right. There's no interconnection between the main schemes, and there's no interconnection yet with Universal Credit. Although I see a means testing question somewhere else, which I'll deal with in a minute.
Okay, so we've had a question through from Olwyn. Do you think the government will do anything about changing the parameters of the self-employed support, for instance, including PAYE earnings, or extend the parameters of furlough? So, I mean, I think probably the main, just to summarise a lot of people who've kind of been talking about this, it would be people who, so if you're newly self-employed, when you're excluded, if you're a limited company and you don't have a PAYE system, or your dividends aren't being included, if you work on those PAYE contracts and your employer hasn't furloughed you, what do you think the chances are of the government moving on some of these eligibility criteria?
Well, look, we and others have been banging on their door for weeks over this. The two real big killers in the self-employed scheme are the £50,000 limit and the 50% rule, which we think in particular the 50k limit is most unfair, because you can earn more than £50,000 as an employee and still be eligible for furlough. Why is there this restriction, somewhat arbitrary, on self-employed people? And the way they've done the tax dates, it does exclude people who started working as freelancers after April 2019. Because remember, the tax that you filed this January was in fact tax in respect of tax year 2018 to 2019. All right, tax year finished 5th of April. If you started on the 6th of April 2020 working freelance, you wouldn't have a 2018 and 2019 tax return to hand in, because, well, you can actually do it now, but in theory it's not due until January next year. We've said some stuff to government about this and they haven't shifted. We've basically pointed out the 50k limit is arbitrary, doesn't apply to employees. Why is it applying to the self-employed? And although they won't admit it, we have an even stronger impression than usual that Whitehall tends to think people who are self-employed and on higher income, actually 50k is not that high. If you're in the south of England working in our industry, you know, it's amazing how quickly that money disappears. But if you're self-employed at that level, or if you're a company director at all, then you're probably doing quite well. Why should we hand out lots of government money? We've very specifically said to them, get rid of the 50k cap. Since you've got a £2,500 limit, we don't quite see the point of the 50% rule. What you could do with late joiners is to accept that they can submit early, and they've been able to do it since the 6th of April. They can submit early their tax return for the year 2019 to 20. And on that basis, you can see that they have spent, you know, that period being self-employed. You've got the information from them before you're planning to hand out the grants. And actually, until today, it was before they'd even started asking people to apply. So why not count that tax year in? And they flatly refused to budge. So my honest and pessimistic forecast is I don't think it's going to get much better, especially because they've now opened the self-employed scheme. They tend not to revisit things once they're running. But we are continuing to work on them, and there will be further discussions within Prospect and Bectu about what we do this week to try and get another gain, if we can get one, for the self-employed.
Okay, and just to follow on from that, I've seen a few comments about, is Bectu lobbying for employees? Yes, we have been lobbying for employees as well, and the question I can see specifically is about if you pay annually, so you've kind of been, if you're someone who's paid as a limited company annually, you've been excluded from the scheme because of when your payments went in. We're trying our best to lobby for all the gaps, because any gap, in our opinion, is unacceptable and everybody should be covered. So but it is a question of what can we realistically achieve. So we're going with everything and we're putting solutions forward. Whether the government takes it up or not, we don't know, but we'll keep trying.
Could I just explain in detail what we're doing? We have pushed really hard on this one. We've offered the government two solutions to their problem with company directors, which is the moral hazard of people between the 20th of March and the 5th of April this year, people who now knew that if you had a PAYE return, then that could be the gateway into you getting money off the government. And they're all piling in and putting in big PAYE payments to themselves. We've told them that there are two solutions to this. Their principal argument is they don't know when they see your dividend income on Form SA100 where it's come from. And actually they don't. It's only if they investigate you do they go into any detail. So we said to them, well, there's two things you can do. One, ask for the dividend voucher, which is a legally required document that's still done in paper, actually, which any of you getting shares from your own company ought to be familiar with. But that basically is the legally required statement of how much dividend has been paid to you as a shareholder. That will give you an accurate idea of how much people have had from their own company. And if you've seen the dividend voucher, you can compare that with what they did on PAYE, with the accounts at Companies House. And you've then got a fairly clear picture of how much they took out of their own company. The role of the accounts at Companies House is that looking a bit difficult with the abbreviated accounts you put in under the small company exemption, but you can, by proxy, sort of divine how much money came out of the company in the form of dividend, right? And if that looks like the amount they're claiming, right, was their dividend payment, and they'd like the government to pay 80% of it, it's another way of measuring it. It's a bit proxy, but it's a way of measuring it. So we've given them two solutions to that one. They've turned them both down. We've also said on the problem of 19th of March onwards, where you've got an annualized payroll, we've said, well, why don't you go back and look at the previous 3 years, if there are 3 years to look at, and you are most likely to find that in every year, exactly the same as has happened in 2020 happened in those years, which was that your accountant paid you a PAY salary, which was just high enough not to trigger NIC. So it's just below the primary threshold, which last year was £8,631. And if they've done that for 3 years, then come on, they're not gaming the system, because that's all they're claiming this time round. That's all that they submitted, and they didn't pile into this with the expectation they'd get much more furlough money than they deserved. That also has been turned down by the government, but we are continuing to work on them.
Okay, so I've got another question here, which should be quite quick to answer. Is the bounce back loan solely for those working through a limited company, or do freelancers qualify as well?
Yeah, it's meant to be open to the self-employed, but I make the point, some of them are actually a bit vague this morning about whether self-employed people can apply. By all means, try and do it. There's definitely one, Santander and RBS, amazingly, because it's owned by the public. Those two banks are fairly clear in saying that they want company registration numbers, which means that they're looking for limited companies. But as with all things, if you don't ask, you don't get. So, you've got to give it a try.
Okay, so the next one we've got is just to confirm, can an employee get furloughed from multiple employers if they're both 0-hour contracts?
Yes.
Yeah, so the answer to that is yes. Okay, so the next question we have is, I think we probably answered that. Okay. Okay, so we have a question here where it's, I have not applied for universal credit as my wife is still drawing a salary, and I believe it means I am not eligible, as the system says I should be dependent. Is that correct?
It depends how big the salary is, and that will depend in turn on individual circumstances. If you don't ask, you don't get. So it may well be worth putting in an application anyway and seeing what happens. Because there may be components of universal credit that won't be badly impacted by your partner or spouse's income. That's the test. And I've seen another question. Some people have put in questions in Q&A, some in chat. Is there a maximum 16,000 savings? Yes, there is. The way it works is that your household savings, if they are between 6,000 and 16,000, will lead to a tariff where for every £250 you've got going up the scale, there's about £4 something taken off your universal credit. And I don't claim, we're not experts on universal credit because our members generally don't get it, unfortunately. By the time you get to 16,000, the tariff has reached your level of universal credit and you don't get anything. So there's still a means test. It's both on household savings and if you have a partner or spouse on their earnings.
Okay, so this is, as this is being hosted by the Bectu Live Events Network, I think we should have a live events question. So looking long term, it's fairly obvious that events will be one of the last industry sectors to come back once lockdown is lifted. Do you have any idea how long furlough payments could be available to us, or the self-employed scheme, if that's relevant? Could they continue even though most of the country will be back at work? I mean, this is very speculative, but... Yeah.
Well, look, at the moment, the furlough scheme is scheduled to end at the end of June. Now, there's two issues around this. One, sadly, is that depending on the number of employees affected at a given establishment, employers, if they want to make people redundant, which if there's no sign of new furloughing, they might well try to do, if they want to make people redundant, they need to give either 30 or 45 days notice. And if they're over 100, it's 45 days. That 45 days is going to kick in around about the third week of May. So actually, to be fair, the employers are making a lot of noise about this, saying you've got to keep it going. The other thing to consider is the government, although it hasn't published its detailed plans, keeps talking about a phased return across the economy. Now, that could lead to a phased continuation of furloughing for industries that are going to be, I think we acknowledge, slow to get back and going. The events sector, I mean, how, if it's a pop concert, how do you run it at like 20% capacity and make the economics work? If it's a trade show, how do you enforce, social distancing when you've got thousands of people wandering around stands looking at stuff? So that's the best I can offer you. We know it's there till June. If we don't hear about an extension, then there is a danger that some people are going to start getting redundancy notices either third week of May or the beginning of June. Sorry.
Okay. So another question I've got here is, if the sole trader grant is open today, which I believe the portal has opened today, do I need to contact my accountant? He said HMRC would contact me at possibly the end of May. Last time I emailed him 2 weeks ago.
Well, I don't know if all the emails have gone out today. We just have reports from some members that they've received them. It's an automatic process where they will look back at your tax filings. So they'll start with the tax that you filed in probably January this year, but for tax year 19 to 20, there's the 50% and the £50,000 rule. If you meet the criterion on that, they will go back and look over the last 3 years to make, if that's appropriate, to make sure you tick the boxes there. And if that all works out, then you are going to get an email from them where they will they'll just ask for your UTR number. Apparently, no other confirmation, not even that you've been affected by coronavirus, and that's it. So yeah, by all means, get onto the accountant. HMRC have been saying quite loudly, don't ring us. But if you don't hear anything in the near future, then I think you really do want to check if they've got you in the net. Okay,
so we've got another question here. So do you qualify, hang on, so I'm just trying to figure out how they've written this. Do you qualify as a sole trader or PAYE for the self-employed scheme? Okay, I'm going to reword this because do you qualify for the self-employed support scheme even if you're PAYE and a sole trader, which I've been for 6 years, so I assume they're moving between the two. The majority of my earnings was through PAYE. My earnings were below the £50,000 each year.
No, you should. Those two income streams are treated differently for tax purposes, and I believe you should actually be able to qualify for the self-employed scheme at the same time as being furloughed. Okay.
What, even if his profits, even if
don't forget the 50% and £50,000 rule.
If he had 50, if under 50% of his oh yeah, because he'll hit it because he's hit 50%, hasn't he? Sorry, Tony. I bow to your knowledge. What am I doing?
I'm not looking at the numbers, but I'm not looking at your numbers, but you've got to understand that over the last 3 years, calculated on average over the first two and then individually over the last one, and all done on average across all of them, you've got to meet that 50% rule, which is that more than 50% of your income has come from self-employment. And that's your total taxable income, not just PAYE stuff, interest, foreign property income, dividend income, and capital allowances.
Okay, so we've got a question here about the self-employed support scheme again. So is the self-employment scheme a loan that we are required to pay back?
Yes, the typical terms are the self-employed one.
Not the loan scheme, the actual self-employed income support scheme.
No. What you get through the self-employed support scheme is called a grant, and you won't have to pay it back. Okay, it's yours to keep, and it'll be 3 months' money up until the end of June. They were saying it wouldn't be paid until the end of June, but there's been a lot of talk now because they've got the portal up and running early that the money might be disbursed a lot earlier than June, and God knows people could do with it. So I think that answers the question about the repayment of the grant. On the other hand, the bounce back loan, right, is a loan, and that will have to be paid back over a 6-year period, but no payments in the first 12 months.
Okay, so just a quick, I think this is a quick question to finish off with. Can I still get universal credit if I'm drawing a state pension?
Well, it depends how big your state pension is and what impact it has on your universal credit, and that will depend on your circumstances in terms of dependence and household income, savings, and all the rest of it. It's all very complicated. There's no snap answers to that question of whether your state pension would in itself automatically disbar you from universal credit. So I just say to people, I know it's a painful process, but go and ask for it. Go and apply and see what happens. Right? There are no penalties for applying, even if you don't think you've got much of a chance.
Okay, well, I think we've hit the 1 o'clock ending of the webinar. If your question wasn't answered, then please do feel free to drop me an email asking me about it if you're in live event. If you're not, oh, are you okay, Tony?
Yeah, I've just spotted a question which it confirms something HMRC, that DWP have not said officially, right? Look, it's from Martin Stansfield, who has applied for UC, initially rejected because he had more than 16,000 in the bank. However, went back and said that some of that money was being held back for his payment on account, which actually is April the 31st, not June, but that's a tiny point. And if you take account of the money he was about to give to the state, right, they have been prepared to process his claim. Now, where this fits into their operational processes that they tend not to publish, I'm not quite sure, but do bear that in mind. So that, you know, this is not the first case I've had where there's been a bit of forbearance on savings because people have been able to explain, oh, look, I'm self-employed and I've got a big tax bill coming up. And there will probably be a lot of people in that position. So that's, yeah, again, if you don't ask, you won't get. It may depend on what's happening in your local office and in terms of the policy they've adopted. But, you know, I mean, we have made this point that one of the things that might prevent people getting access to universal credit is the fact they're about to give some money to the state. Sorry to dive in on that one. I just thought it was
No. It's sometimes hard to pull out like the key questions because there's so many people asking things. Okay, well, I think we'll have to stop it there because we've gone past 1 o'clock. But if your question hasn't been answered, if you feel like we didn't cover it, then please do feel free to get in touch with your official. You can if you're in live events, you can drop me an email. It should be on the invite that you received. If you got in here from some other means, then email your official or email Bectu at membership@bectu.org.uk, and they'll direct you to the correct official if you need your question answered. Thank you so much, Tony, for participating and for doing another one of these webinars. For those of you who are in live events, and that is the definition of live events, excluding theatre and dance, because we organise those separately. But if you're in live events, so you do music, comedy gigs, festivals, tours, music venues, whatever, we will be having another one of these sessions, not a webinar, an actual open meeting on Monday at the same time next week. And we'll be talking about cancellation policies and minimum calls and stuff like that. We're going to call it Bectu Live Events Network Cancellation Culture. So hopefully we're going to see if we can iron out something around that we can sort of work towards when we come back post-coronavirus. But thank you for phoning in. I'll be sending out an invite to people who can join that meeting who are live events members. If you do not receive it, drop me an email. Well, it was lovely that you came, Tony, and that you did your talk, and goodbye to everybody, and catch you next time.
Good luck to everybody. By the way, could you all write to your MPs and tell them two things? I mean, one, self-employed and atypical people are not generally millionaires. You're not, and you can probably give them a very good picture of why you're not. Secondly, they're convinced, your MPs, they've been lobbied by government. You know, they're convinced that these schemes are all up and running and looking quite good. You can explain to them why they don't necessarily work for you, and make them go and do their jobs. Okay, thanks, Naomi.
Bye.
Bye all. Bye.